Hello and welcome to another live trading module. In our previous module, we traded based upon looking at the weekly chart initially. Let's expand that just one bit. And we sold the breakout of the low of this particular week right here. We sold down here. We came down and we took 125 pips of profit. That's one type of breakout trade. That's simply breakout of the low. Now we're going to go to the next time frame, which is daily. We're going to take a look at some things here. Let's take it up here, expand that just a taste. There we go. Now here we have two different types of breakouts that we want to look at. Typically there's a breakout of a high or low either on individual bars or on a group of bars. For instance, we could say that we'll take a horizontal line here. I'll just place it right there. We can say that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We could say that's easily the highest high of the last 10 days. 9, 10. And we could say that that is easily the lowest low of the last 10 days. So this defines what's known as a channel breakout because the boundaries form a channel within which prices trade. Now, as you can see, prices are still inside of this channel for this particular breakout. Okay, so at that particular point, nothing would happen. But how the breakouts work is you basically choose the time period, and this is daily. Then you choose how many days, or if it's weekly, a weekly chart, you choose how many weeks you want to use for a breakout. Now in this case, that was a 10-day. Let's take the objects list real quick. Got to remove both of those. Okay. If you're looking for the last, say the last 3 days, not including the current day, take a look here. That's the highest high. That's the lowest low, basically. So we're looking at, that's the channel right there. So if the price moves up above here, we'd look to get long and buy the euro dollar US dollar going upward. The price breaks down and breaks below this channel that we've defined, then we'd want to sell. In this case, we have more than one type of a breakout trade, right? We have not only the breakout of these last 3 days, we have something special called an inside bar. And an inside bar is basically a bar whose high is lower than the previous high, as I'm showing with the arrow here, and whose low is higher than the previous low. So this bar right here in particular would be an inside bar. And the way it's looking, this bar today on my chart is looking like an inside bar so far, but it's the day's not over yet, so it can go either way. So what we want to do is we want to sell the breakout on either side of this particular daily bar. So let's take a look and see what the range is and make sure that it's going to fit within our parameters. high minus the low here looks decent. High minus the low here doesn't look too bad either. And that would probably be the bar that we'd want to do, is this particular one right here. Even though a lot of people trade the inside bar, they'll trade right here, the extremes of this bar. But we'd like to move to this bar here and use the full 3-day kind of extremes. So that's the 3-day high extreme, that's a 3-day low extreme. Okay, so let's take a look. Okay, that's 176 pips, and that is near our risk parameters. 176 pips, and what we'll do is we'll buy on a breakout of this bar plus 3 pips, and we'll sell on a breakout of that low minus 3 pips. So let's do our calculations here. You can see that our high is 1.48587, and our low is 1.46827. Okay, so we can actually place an order based upon this bar, and it'll be a pending order, of course. So let's pop over. Let's pop to new order, and it's going to be a pending order. Okay, since we look to buy above the market, we're going to place a buy stop up here. And the price we want to place that buy stop at is 1.46827. Okay. What did it tell me? Invalid stop loss or take profit. I'm not trying to stop loss or take profit. Just want to buy stop. Open price you set must differ from market price by at least 40. This is a particular limitation of this platform, is that you have to be so far away in order to do it. But the price is actually 40 pips away, so I don't understand what the problem is. Let's try that again. Make sure I've got my price right. There we go. Always double check your prices, right? Okay. Let's start with a whole new order here, since this one seems like it's going to give us challenges. Okay. Pending order, buy stop here. Okay. We've got a buy stop in place right up here, right where we want it. Okay. Now we're going to place a sell stop. Sell stop at the price 1.46787. Okay. And I think the problem before was perhaps I was putting the sell stop price where the buy stop price should have been. Okay, so here we go. All right. So let's put a comment in here. Let's call it breakout of inside bar and last. How much? I'm not gonna. Let's call it breakout of inside bar low. Okay. I'll say that. Okay. Not sure if they'll let us go through here, and because I'd like to label the buy stop. Okay, no, it's fine. Okay, there we are. There we are. We've got both trades in place. You got sell stop here, buy stop there. So this is not one of those trades that's going to be an immediate trade, as you can see. This is what I like to call a set it and forget it trade. I love set it and forget it trading, and let me tell you why. The orders are placed. Your research is done. The parameters are set up. Conditions come around. You see those conditions. You place your pending orders. And then you simply do one of the hardest things for traders to do, and that's wait. And trading is easier once you have patience. Trading is a lot easier once you have patience. So you have to learn to wait, because here's the thing. You want to wait for the right moment. And you want to be as selective as possible in choosing your trading opportunities. Think about all the times in life where you waited for something and you can tell yourself, yes, that was well worth the wait. And I'm not talking about being on hold with a phone company or any of those types of things. I'm talking about things that a great meal or a great relationship or what have you that you waited for. A great trade is the same way. It's worth it. It's absolutely worth it. Otherwise, we're just out there doing things randomly, and we let what we want get, which is to have some trading action, get ahead of what the market wants to give us. And we want to take what the market wants to give us because it's just sitting out there. Just sitting out there waiting. So this trade there's nothing else for us to do here. We are all set, and we'll see how things develop as we see this trade progress. Thanks, and I'll see you in the next module for a continuation of this trade and more live trading. Okay, here we are with more live trading. We've just recently placed this particular trade, an inside bar, a breakout, using daily bars. This is also a breakout of a channel of the last 3 days highs and lows. So it's a channel breakout as well as an inside bar breakout. So this is good. We've got this trade on. What we're going to talk about now is expanding our trading opportunities. So here's what we're going to do. We're going to go over to File, go over to Profiles, and go to Save As. And we're going to go to USD CHF candlesticks 1. Okay, so just name your profile the same way, just like that. There we are. Okay, now here's what we're going to do. What we want to do is we want to use a different currency pair, and we're going to use the US dollar Swiss franc. But we're going to have the same kind of profile setup here. So here we go. Drag, drop, drag, drop, drag, drop, drag, drop, drag, drop. Now here's something that you'll notice is that when we do this, all the trading lines from our orders, showing where our orders would be, are gone. That's because we don't have any orders in this particular currency pair, but we do have orders in the euro dollar US dollar. I'll just pop back over, go to profiles. Okay. There we go. Okay. So the whole point of this is that you can create profiles like this for any number of currency pairs. You may have your very own favorites, or you just may want to follow along with what we're showing you here and develop your own favorites. One of the reasons that I like the euro dollar US dollar is because it's traded, it's very liquid, and we want to trade in those currency pairs that are as liquid as possible. That's what we're striving for. The euro dollar US dollar, the US dollar Swiss franc, the pound dollar, and the US dollar Japanese yen, all very liquid, and there are others that are liquid too, but in the majors, which are the ones which contribute the most volume to the Forex market, these are the four that we typically concentrate on. Although you can look into other areas and trade pretty much anything you want, as long as you have your risk control in place, have your parameters all in, have everything all set. So I'm going to pop back over here to US dollar, Swiss franc. Okay, there we go. That's everything we were looking at before, just in the form of the wonderful US dollar, Swiss franc. And as you can see, lots of interesting things. You look around and find patterns and trades that are of interest to you. The nice thing about technical analysis in general and patterns in general is that you can not only apply the same principles to various time frames of charts, such as monthly, weekly, daily, but you can apply them to different currency pairs as well. And things such as our simple principle of the inside bar can work very, very well. In fact, I'm going to pop through here. We could take a look at a couple of these here monthly. You can work our way back and take a look. Where was there an inside bar? Okay, there is an inside bar. There is a breakout. Now, two different ways to trade inside bars, as we stated before. Either the breakout of the high and low of the inside bar, or the high and low of the bar preceding, or as some people say, engulfing the inside bar. So this broke out to the downside. It didn't ever go back up to get stopped out, and it continued down so far. So that's a good trade. This in and of itself is actually an inside bar. It's a big inside bar right here. Here's another inside bar. Break out of that low. That's looking good. Here's another thing to consider as well. Take a look at this monthly inside bar right here. If you're considering trading it, think about the size. Okay, this is a 1,000 pip bar. So if you're trading on either side of this, then you're talking about 1,000 pip. If you're going short, you're talking about 1,000 pip stop loss on the other side of that. If you're going long, you're talking about 1,000 pip stop loss on the other side of that. So the size of the bars, the magnitude of the move makes a big difference too. Some may have the pattern that you're looking for, but not be of the right type of range of volatility that fit within your risk parameters. See, for instance, this month right here, well, that's almost 2,000 pips. Big move. So you may not want to trade that particular inside bar. So you may look for something, smaller, May look for something along these lines. That's still big. Monthly trading on monthly charts, period, requires either a lot of capital, either that or scaling your trades, your lot size as such that you could take these particular types of trades. And if we're taking trades like this and we're looking at 500, say 500 pips, 800 pips, 400 pips. So if you're looking at 500 pips, we would essentially be looking at a little bit over 3 times what we are currently looking at with 5,000, our $5,000 demo account here, right? So we have to have 15, $16,000 in that area for that to work out. It says 555. So as that goes up, you basically, if you're looking to risk 3%, you look along here and you take, say, this particular bar, the high minus the low of this particular bar, and you see up there that it says, okay, it's 814. Basically multiply that times 33 and you get a rough idea of where you should be with regard to the standard trade. 814 pips with a lot size, not a standard lot size of 1, but a lot size where each pip is $1 rather than each pip being $10 like in standard lot size. So it'd be $25,000, and you multiply that times 10 for doing a standard lot, keeping those risk parameters. Some people choose to risk larger amounts. They choose less conservative ways of trading, I guess is what I'm attempting to say here. In preserving your capital, of course, it just makes good sense. Just stick within 1 to 3%, and because you don't know, no one's right all the time, and you don't know when you're going to be wrong next. And why have one mistake cost you your entire account? Doesn't make sense, does it? No. So okay, and close this out. And here is another profile, another set of opportunities to trade in this market. Could look at the very same thing here, this daily chart, and we don't have a clear-cut inside bar here. This particular day may end up being a clear-cut inside bar with this green bar here engulfing all of it, but we don't have one really clear-cut right there. So we could trade a breakout either side of this. I'd like to wait for an inside bar before we make a particular move in that direction. We could see if we could do this on a weekly basis. It's already broken out up there. The week's just starting, so we can't really tell very much about that. So we're just kind of taking a look at some of the different types of markets. Now let's pop down here. Profile, save as. Yes, you already know what I'm going to do next, don't you? We're going to do Great British Pound, US dollar. Candlesticks 1. This doesn't necessarily have to be candlesticks the way we're trading it using inside bars currently, but we'll be looking at some additional things, and candlesticks will be one of those. Using candlesticks will be one of those trading methods that you'll find very handy. Okay, here we go. Okay, so we're going to drag and drop, drag and drop. Again, we're just creating another profile. And creating profiles gives us additional may give us some additional trading opportunities. That's what we're looking for, rather than simply waiting for one particular currency pair to do all the things we'd like to see it do. We multiply our opportunities by multiplying the number of trades that we get involved in different markets. That's a basic principle of diversification, but we have to be careful because it has to be a truly diversified trade. And I'll talk to you more about that in a bit. But for now, let's take a look. Let's enlarge our charts here and see what the Great British Pound has to offer today. That's interesting on the monthly. Okay, just actually is kind of meandering along there. The weekly is, of course, following suit. Yeah, daily is okay. Nothing. We could look at things. Maybe some bottoming out here due to these particular types of candlesticks. Actually, there we have an inside bar, and we could actually trade the inside bar. Let's take a look. Unfortunately, we can't because 267 pips plus you add 3 on one side for 273 on the other side for 273 outside of our risk parameters. So that's a trade we would pass on. You pass on trades outside of your risk parameters because taking those trades can get you in trouble. Now, when the daily seems like it's too big in a particular currency pair, of course you can always look for those same patterns in smaller time frames, like the 4-hour here. 4-hour is this is a very popular time frame to trade, and it's short term enough for those who enjoy the action itself of forex trading, because it can provide a lot of trading opportunities, while long term enough to produce some nice meaningful moves, as we can see here. Actually, you see right here, breakout of that inside bar. Actually, it's to both sides. That's another technique called fading the breakout. So you wait for it to break out one side, and you then place your pending order on the other side of that bar prior to the inside bar. And in this case, if you're going, would have first gone long, perhaps, and then down here short to stop yourself out. But you want to stay short. Another inside bar here. And this inside bar, as you can see, spinning top. We'll talk about candlesticks, but spinning top, inside bar, and you can see here the slowing down of that particular downside momentum. Going back up. That's actually called an outside bar, when the high is higher than the previous high and the low is lower than the previous low. That's kind of the opposite of an inside bar. Another inside bar, no breakout to the downside. There is a breakout here to the upside. Let's see, yeah, we would have still stayed long based upon the breakout to the upside. And once you're in an inside bar trade, it's going in your direction, let it continue in your direction. Yeah, right? So we'd still be long, still be long, still be long. Then you could either trade, again, the breakout of the inside bar itself or the bar prior to the inside bar. We'd be doing that to the short side. can see all these things here, which I mean that upside momentum is slowing down. You can see that in these candlesticks, that doji and the spinning tops here. But nothing I would trade in particular right here, looking at the 4 hour or even the 1 hour. But again, it's here in case you want to come back and take a look at the pound dollar, or we both want to do that later. So okay, we're going to pop over here, and basically this is our exercise in profiles. It's another very popular currency pair to trade. We'll pop in here and let's just set our profile up. Sorry, wrong one. No problem. If you put the wrong thing in there, just put it in here. Whatever you pop over the top of it, it replaces the previous currency pair anyway. It's pretty neat, huh? Yeah, I love the way this works too. So, okay. So there we have it. Let's see what the US dollar Japanese yen looks like. Monthly, could be some bottoming out there. Let's see weekly, what the weekly looks like. Okay, just approaching some previous lows back here from December 08. That's interesting. Daily, let's see what things look like. Okay. Japanese yen can really get moving. Don't see any particular pattern that we may be interested in here, so okay, let's see, 4 hour. Again, just shows you have to be selective, and mm, 1 hour. The 1 hour still in a breakout of this particular inside bar, the low of that inside bar. This one doesn't look too, it's not down there, so I'm not necessarily thrilled about these, what I'm seeing in these particular trades right here. So we'll probably just get back and take another look at those at another time. Here we are back at our euro dollar US dollar trade. Nothing's happening, so there's nothing else to do here. But we've got some additional profiles set up, and the takeaway, as they say, the things to be learned in this particular continuation of trading real time is that when you do find good patterns and good trades like inside bar breakouts, then you can do those on a number of different time frames as well as a number of different currency pairs. So this, it always gives us something, some potential that's somewhere and something that we can do. All right, until the next module, well, we'll be looking at live trading once again. Thank you. Okay, here we are back again today, and we're in our trade. We are officially short the euro dollar US dollar, and let's take a look here. Let's go down here to, okay, so we are 38 pips to the negative currently, and judging from the looks of this, we've been about 53 pips to the positive. So we've had an opportunity here to take profits if that is what we wanted to do. We wanted to stay in this trade longer for the purposes of demonstration and not set any trailing stops. We'll pop in here to the hourly and take a look real quick. We broke through here and sold off. Went down nicely. Now actually when we were 53 pips to the good, we could have actually placed a break-even stop right back here where we were in the market before, if, again, our trading methodology was calling for that particular type of stop. Okay. Now, I'm going to start on the larger time frame. We're going to work our way back and look at a few things, and we'll also talk more about stops and stop placement as well. The monthly chart right here, we're taking a look at the monthly. I just wanted to make that a little larger. You can make your adjustments here by zooming out or zooming in. Zoomed in for a taste here. On the monthly chart, again, it's been a strong upward move, strong downward move, strong upward move. And we haven't broken out of the previous month's high or low. So there's nothing really significant happening. We're really in the middle of the range here, okay? All right. Pop over to weekly. Here we go. All right, into weekly. Now we were previously short based on a weekly chart because we found a weekly chart pattern, and we found a weekly bar that was small enough to fit into our risk parameters at the time. So we sold at the break of that weekly low. Now, here, as it happens, we're selling the break of this weekly low, and it has broken down. We have some negativity there, as evidenced by the red candle, but it's early in the week. Now here's what we really based our trade upon, was the daily chart, placing our stop up here and our entry point right down here. So again, we came out a little bit to the good, then the market moved back up against us, and this is where the market is now. It's about 1/4 of the way back up to where our stop is. And we're going to leave our stop in place currently because it's based upon what we've got drawn up here, where the market had a little problem getting through that as our resistance line. It did break through support, and we sold based upon that. Take a look at the 4-hour here. Top down trading again. Had a nice size bar down, and then a turnaround bar, and this is the reversal bar here actually. It's the bar up, then we move up, and here's where we are right here so far today. Okay, we can expand that if we want. Since we've been expanding them, we'll take another look at it this way. Now here we are, we've come down here, we started to move up, and we really are kind of meandering, but then we do have a push back into the territory here inside of our trade. In fact, we take a look at that on the 4-hour, we're inside of that, back inside of our channel. We make profits when we get outside of our channel. We make losses if the price goes up to this point. And it's important for you to see these numbers, again, that sometimes the market will immediately go with you and you're in a profit, and there are times when it simply will not look back and it'll continue in that particular direction. In this case, It went nicely with us, and then it reversed and went back and moved in the opposite direction. So that again is, a natural part of trading. One tendency that many traders tend to have is to want to move the stops. And believe me, it's quite natural. No one enters into a trade and go, "Hey, I immediately want to lose." That's not how any trader's mind works, even the most successful traders. So the tendency is, wow, you get a little bit to the good. I'm going to, protect my profit here. And you keep hearing sayings such as, you can never go broke taking, a profit. Well, that's not exactly true. The account equity, which is the sum total of the amount inside of your accounts, and follow the arrow here, we'll go down to the bottom here. We're about 85 pips to the good in our account. That's thus far. Okay, and that's the equity. Your account equity grows when the sum total of your winners is greater than the sum total of your losers. So, for instance, if you have a series of winning trades and they all add up to $15,000, and all your losing trades all added up to $10,000, then you've made a $5,000 profit on top of your initial equity, whatever that might have happened to been, what that might have been at the time. So the tendency, again, as we stated, is to want to do something all the time. And you can do that, again, dependent upon your trading methodology. You can set your stop to break even. You could set your stop back here, and you could trail it along these highs here. I'll give you an example of what that looks like by putting some horizontal lines down. And you won't be able to put very many down because it didn't go very far in our direction. But once it got down here, you could actually do that, and you'd be able to pull a profit out, which at this particular time, that doesn't look like such a bad idea, does it? Wow, we could have grabbed a profit instead of being currently in a loss. Well, a lot of things happen in the middle of a race that don't really have anything to do with the outcome of the race. And the market's moving to and fro, fluctuating as we call it, is completely natural. Giving the market enough room to move, that can be the challenge. That could be the challenge, especially for individuals with smaller account sizes, but it could be the same challenge for, let me erase that line, for people with large account sizes if they are risking too large a percentage of their equity per trade. Okay, that was a long-winded way of saying we don't have to do anything with our stop. We're going to leave this trade as is. We're going to leave our stop up here. And yeah, we could actually trail it down to any number of these points in an effort to reduce our exposure. And some people will actually go through and move not only a stop to a break-even point, but a stop to points such as these, that high, then down to that high, then down to that high. Of course, someone would have been stopped out at that particular point. And that's called a trailing stop because it trails or follows the price action. So a trailing stop on a sell gets lower and lower and lower and lower as the price moves down. Going upward, a trailing stop gets higher and higher and higher and higher. And a trailing stop is designed to help the trader preserve the profit or capital in general. And it's a very useful tool when we give the market enough room. Now you can imagine having a trailing stop that's 1 pip. Quite obviously, it would have to be a very slow moving market for a 1 pip trailing stop to be effective. I would venture to say you get stopped out a lot trying that. So with all that in mind, and again, the long-winded way of saying we're going to have to be patient and we're going to see where this trade goes. Now, the possibility that the market can move all the way up here and stop us out is there, as well as move down from here and get us into a better get us into profit and a better position. So what we're going to do is we're going to leave this trade and we'll come back to it and we'll take a look at it and we'll see where we are from there. Thank you very much, and I'll see you in the next module.